That was the most since October last year. Every sector in the green with energy and materials leading the way. And in terms of energy, we saw oil higher too. On all the geopolitical stress, the IEA raising consumption growth forecast for a third straight month. The longer term picture, though, for oil is still very much one of oversupply. Well, let's get more on our top story now. President Trump saying he will refrain from slapping fresh tariffs on European nations that oppose his bid for control of Greenland, citing a framework for future deal.
Looks like we haven't got something that gets everything we want, including especially real national security. Well, the deal is going to be put out pretty soon. We will see. It's right now a little bit in progress, but pretty far along. It gives us everything we needed to get. It's the ultimate long-term deal. And I think it puts everybody in a really good position, especially as it pertains to security and minerals and everything else.
I think in the background piano music soothing and civil. Let's get to Washington and Bloomberg Balance of Power co-anchor Joe Matthews. So, Joe, we don't know what's in this framework of a deal, but just as the cooler, calmer environment enough?
Well, it's a great question. The mood music definitely improved today after the president posted on Truth Social the very little information that we have. Now, we've heard the president refer to concepts of a plan before with regard to health care domestically in the United States, kind of reaching for similar rhetoric. Concepts of a framework of a deal. So this is not obviously a deal that is ready to be signed.
No, I just wanted.
As we're showing on Bloomberg TV, it's to form the framework of a future deal with respect to Greenland and the entire Arctic region. The solution, if consummated, reminding us it has not been, will be a great one for the U.S. and all NATO nations. Based upon this understanding, I will not be imposing the tariffs that were scheduled to go into effect on February 1st. Now, the president did make reference in an interview today to rare earth minerals, as he did just there when he was speaking with reporters, but we don't have a sense of what would be different in this agreement than what the United States already enjoys in Greenland.
Joe, just as quickly almost as Trump ramped up this rhetoric on Greenland, it's dissipating, there's a backing down. Do we have any indication of, this swift reversal?
Any indication of a reversal from the reversal? If that's what you're asking, it's unclear. This is something that really just progressed throughout the day. If I'm understanding your question correctly, and please reframe it if I did not, but the arc of the headlines today, beginning with that speech in Davos in which he was clearly agitated and referred to enemies in the room, to then learn that military options are being taken off the table, to then learn that a framework of a deal is underway. We'll just have to see if the reversal is complete.
Okay, what does this mean for the potential that the EU goes on and unfreezes the ratification of that trade deal with the US?
Well, that has yet to be known. Look, the president met today with a lot of world leaders and had sideline meetings with leaders of some of the nations that we're talking about here, including Belgium, the extent to which he was threatening tariffs. Nothing's being thrown out. Scott Bessent, the Treasury Secretary, said that would be very short-sighted, that the U.S. has no indication of that being the case, much like the idea of dumping U.S. treasuries. But let's be honest, that deal was not completely baked either, and we're just going to have to wait to see if this recent change in rhetoric by the president helps this.
All right, Balance of Power co-anchor Joe Matthew there in Washington. Let's get analysis now and welcome Geopolitical Futures founder and chairman George Friedman. George, thanks very much for joining us today. President Trump now saying that the US is going to be involved in Greenland's mineral rights. We still don't know, as Joe was saying, what the content of this framework of the deal is. But do you think we could have got to this point without all the threats?
Probably. But at the same time, you have to understand the strategic purpose of Greenland. This is not a minor issue. Since the Cold War and today, this is one of the primary routes between Greenland and Iceland for Russian submarines to enter the Atlantic. Also, with the evolution of warfare and the Cold War, Greenland is a very important place. Why the president demanded to own it, I don't understand. We have full access to it. I don't know what kind of deal was made. But this is not the deal. This is not a grinding thing about Greenland. It matters.
Well, and to your point, it's effectively NATO territory being controlled by Denmark, so one assumes the US can pursue whatever military aims it had in the region without resorting to threats of tariffs, etc. But what do you think has caused the change in the president's rhetoric here? Because it seems the messaging out of Europe didn't get any softer, if anything, it got more stern.
The president has a tendency, as in business, to make the first demand and make it absolutely unnegotiable, and then negotiate. So if you've ever involved yourself in business negotiations or play the game, you understand that it's a head game. You want to get ahead of it. It's not normal in diplomacy. It's not the way it's usually done, but it's the way he does it.
We all know how mercurial the president can be. On that note, perhaps if you could give us a sense of your judgment in why he backed down in such a manner. Could it perhaps be the market reaction that we saw earlier in the week?
I don't think it was random. I don't think he's unpredictable. He frequently makes very aggressive statements that he then backs off on. That's how he opens negotiations. He's done it many times, many ways. If you've been watching him very closely, this is not out of the norm. At the same time, it was extreme because it expected markets and other things to be very greatly the next day, and he then backed off. So this making an outrageous demand and then backing off is his style, and it's unnerving at times, but he's present.
With that in mind, how much damage would you say has been caused with the relationship with Europe?
I don't think the Europeans have much of a choice of having a relation with the United States. Many times they have presented the United States or felt the United States to be able to properly. They got over it. It's not a question of their liberty, it's what they need. NATO needs the United States to be part of it. The United States needs NATO to protect against Russia and so on. So therefore, the reality is what the reality is. And whatever the talk is not that important.
Yeah, you point out that this is not usually how diplomacy is normally done. It's, these diplomatic protocols are in place for a reason. I mean, we heard from Canada's Prime Minister Mark Carney saying this is the end of the rules-based order. So how does NATO move forward from here? What does the alliance look like in the remaining 3 years of President Trump's term?
Well, in many ways, diplomacy is a slow-moving thing, but quality is very important. Sometimes it gets in the way of getting things done. Trump is not a diplomat. Trump is the president of the United States. He comes from the business world. He treats it that way. Each time it does something that appears outrageous, it turns out some sort of sense. And therefore, it should be understood that the norms that have been living for 80 years, since 1945, are falling away, partly because of Russia's problems, partly because of the relation between the US and China. These are all evolving. And at this point, the norm that has been in place for the past 80 years is no longer the norm. As for his choice of doing it this way, well, he's the elected president of the United States, and he gets to do it. But I don't think he meant to see.
What's your analysis of how this would have been received in Moscow and Beijing, the drama of the past couple of weeks?
Well, most of the United States can't make out Putin, and why he can't reach an understanding. I don't think the Russians understand the Americans under these circumstances. This is a very different president, and they're used to presidents who operate in the framework that do not have tensions between the United States and Europe. This is a president who sees Russia as basically having failed in Ukraine and not being a threat. And this is a president who therefore sees the relationship with NATO evolving. NATO may not want that relationship to evolve. He does want it. So if you understand that, then it doesn't seem so odd that he's breaking norms.
George, it's been great to get your insights. Thanks so much for your time today. Geopolitical Futures founder and chairman George Friedman. We have more ahead on the Asia trade. This is
Be very careful with guys. Brace yourself. We're going to turn your eyes out. Okay.
Citizen rights to every challenge there is going to. One's getting done.
Drive design, deliver, make it sing. AI builds the deck so you can build that thing. Do that with Acrobat.
Did you hear? Jackie and Tom
are getting a divorce.
There's a reason Detective Johnson is the gossip king. Just like there's a reason Morgan & Morgan is America's largest injury law firm.
Pilates later?
Morgan & Morgan, for the people.com.
This is me now. Feel exceptional by design. Get 0.9% APR on select vehicle models. Plus, current eligible non-GM owners get up to $2,250 allowance on Encore GX.
When you walk into a Burlington, you'll be amazed at how much we've changed. Brands, trends, savings. It's giving you main character energy. Because at Burlington, the deals aren't the only thing turning heads. Seriously, with these savings, why shop anywhere else?
Your position that there's no judicial review, no process required, no remedy available, very low bar for cause that the president alone determines, that would weaken, if not shatter, the independence of the Federal Reserve. Once these tools are unleashed, they are used by both sides, and usually more the second time around.
U.S. Supreme Court Justice Brett Kavanaugh speaking as the court hears arguments about whether to let President Trump fire Fed Governor Lisa Cook. Now, Supreme Court justices from across the ideological spectrum cited concerns about Fed independence and the potential market impact of President Trump's effort to dismiss Lisa Cook. Let's bring in our Fed reporter, Katerina Zareva. Katerina, what do we learn from the Supreme Court's oral arguments today?
Just grow it this way.
Yeah, today we heard a real reticence and apprehension from the court to allow the president to fire Lisa Cook. It was really interesting, as you noted, it was kind of across the political spectrum. Both some of the conservative appointees and the more liberal justices really questioned the government side quite hard. So that's, of course, the administration's lawyer, and had just a variety of questions. And it just really seemed like they were skeptical of the president's efforts to fire the Fed governor, and concerned about what that might do to markets and what that might signal, to future presidents, as Justice Kavanaugh said in that clip that he played.
The notion of Fed independence also sits central to these conversations. Was that talked about?
Yeah, absolutely. That was brought up as well by some of the justices. Of course, there were Friends of the Court briefings filed by, multiple different entities, economists, former central bank officials in support of Governor Cook, making this argument that this really gets to the heart of the Fed's independence. It, of course, has had this independence to a varying degree over the years, but in recent history has enjoyed political independence, has been able to set interest rates regardless of who the president is. And so, there's concern, and we heard it today at the court as well, that allowing a president to fire a Fed official, especially when there's not a very strong cause for doing so, that could erode that independence.
So what would it mean here? What are some of the implications, perhaps legal as well, if the Fed or if the courts allow Trump to fire Lisa Cook?
Yeah, I mean, it really depends on how they do that. This case, for example, this was an emergency ruling before the Supreme Court, and they kind of indicated that they might be willing to let the case actually play out in the lower courts. They do not have to decide on the merits of the case in this decision. They were really just asked whether Governor Cook could stay on while these proceedings take place in the lower courts. So they may just rule narrowly on that. But if, for example, the lower courts and then eventually the Supreme Court decide that a president can fire a Fed official for not much cause, pretty much because he or she does not agree with them, then you run into a scenario that Justice Kavanaugh laid out, where every 4 years, when you have a new president, they could just wipe the slate clean, fire all of the governors and hire new ones. And at that point, you run the risk of having monetary policy set, much more based on politics than on what might be good for the economy.
All right, Bloomberg Federal Reserve reporter Katerina Sarayeva there. The top global headlines that we're following today: President Trump says he will now ask Congress to implement his proposal to cap credit card interest rates at 10% for 1 year. It follows resistance to the policy from banking executives and some lawmakers. JP Morgan CEO Jamie Dimon says the move would spell economic disaster for the US, and Citi Chief Jane Fraser says she doesn't see a realistic chance of bipartisan support. US envoy Steve Witkoff says he and Jared Kushner will travel to Russia on Thursday for talks with President Vladimir Putin on the war in Ukraine. US and Ukrainian officials say they've made significant progress on a 20-point plan to end almost 4 years of fighting. President Trump says he believes Russia and Ukraine are now at a point where they can get a deal done. Australia's opposition coalition has collapsed again in the dispute over the Labor government's crackdown on hate speech. The Nationals leader says the partnership can no longer continue amid differences with the Liberal Party over the bill's impact on freedom of speech. The right-wing coalition had already briefly split last year following its heavy defeat to Labor in the federal election. More ahead on the Asia trade. This is Bloomberg.
So we have the resources in the United States to service our debt for the foreseeable future. So there's a sense of tranquility, but I believe that might be misplaced. And my biggest concern is that the longer we continue to accumulate debt in America, in this moment of let's call it tranquility towards the numbers, when the inevitable correction happens, the far bigger that correction is likely to be.
That's Citadel CEO Ken Griffin speaking to Bloomberg and Davos about risks over growing US debt. There was tranquility of a different kind on the mind of markets. This cooling of heads around the Greenland issue really providing a tailwind to risk assets. We have the S&P up 1.16%, every sector in the green. Volatility fell 16%. We have yields fall back a little bit as well. And we can see that bond futures looking somewhat calmer, and S&P is pointing higher as well. The dollar also catching a bit. The U.S. National Economic Council Director Kevin Hassett says President Trump's tariffs have been positively disruptive. Speaking to Bloomberg, Hassett also says he does not believe the tariffs are pushing U.S. allies closer to China.
President Trump is disrupting an order that needs to be disrupted, and I think the markets are celebrating because of that.
Do you think that tariff uncertainty, though, we got a whiff of Liberation Day this week because of what was going on with Greenland, do you think we are past the most peak moment of tariff uncertainty for financial markets, for consumers, and for other countries?
Well, I think that the tariffs have surprised a lot of mainstream economists. I used to be one of those guys, at least on the tariff run, where I've been surprised, especially.
Now you're too late.
It's just astonishing that everything that's in the models that we were taught when I was in grad school just turned out not to be true. And we have, I think, a strong understanding economically of why that is. It's basically that if we have a trade deficit with China forever and ever, then by definition, they're basically dumping into the U.S. with inelastic supply. And so if we put a tariff on them, then they bear the tariff. And the same thing is true for Europe. If we have a big trade deficit with them for a long time, then they basically cut their prices in order to maintain market share in the U.S. And I think that the question is the interesting question that I've been puzzling over and talking to some of my meet stream economist friends is why is this so positively disruptive? Has President Trump's agenda been so positively disruptive for Europe? And I think that one of the things is that he's made them lift their game in terms of restoring the global order by increasing defense spending. But also, remember, it used to be that we were always talking about zombie companies in Europe. We've kind of stopped doing that, haven't we? And I kind of wonder if the competition that's created by the tariff and the tariff uncertainty hasn't been a real shot in the arm for the European economy.
We've heard a lot of people in Bloomberg talk about that. Actually, what Trump is pushing Europe to do is to do what's good for them.
Right.
But are you concerned about any of these unintended consequences? We saw Spain go over and have a very cozy relationship with China last year. Prime Minister Mark Carney just went over to China. Then he came here to Davos and talked about how the world order that we know is dead. And if you're a middle country, you're at the table, you're going to get eaten. Is there potentially this consequence where we push our allies closer to China, which is the US's biggest adversary?
No, I don't think that's happening at all. And I think that what is happening is that people are learning, and indeed the people here in Davos, that's one reason why we're here to spread the news, is that you've got all this analysis that says that Trump's plan is working. It's working both for the U.S. economy and for the global economy. And I think that people in the end, they look at their wallets, they see how it's going. And in the United States, they're seeing a couple quarters of 5% growth and booming markets, booming wages. And if they see that everywhere else, then I think that it'll have a big political effect. I think the people who make the most noise attacking President Trump aren't necessarily speaking for their countries. They're speaking for their very, very liberal policies. You've seen President Trump call some of them out the last few days.
National Economic Council Director Kevin Hassett speaking to Bloomberg's Anne-Marie Honda at Davos. Of course, we've also been tracking some of the moves in the Japanese currency. Don't forget tomorrow is DOJ Day, no move anticipated, but the odds, or rather, should I say, the expectations from markets of Reda's messaging even being enough to push back against the yen weakness, that going into tomorrow is still very low. Of course, we've also been tracking the yen not just against the greenback, but also the euro, given these developments over Greenland and these threats of tariffs over major allies from earlier in the week. And in Australia, we have in the next hour jobs data that is due as well. You are for the moment seeing a bit of the yen weakness from earlier in the week moving off a little. More hit on the Asia trade. This is Bloomberg. Let's take a look at how Asian markets are faring in the early parts of the session. We are seeing that bounce back following on from 3 sessions of declines. And of course, for Japan stocks, this is following on from 5 sessions of losses. So certainly Trump's comments on Greenland might be a bit helpful. That being said, we are also watching out for maybe some of the risks in Japan, given how the lenders were hard hit just a day ago, given the JGB volatility. President Trump's decision not to impose tariffs on allies over Greenland has taken U.S. stocks back to their so-called default setting. The market now signaling that it wants to climb higher. We've got optimism about a re-acceleration in growth as well. Let's get more with Bloomberg and Life strategist Mark Cranfield. So, Mark, does this mean stocks come out on top again compared to what we're seeing in bonds and in the currency?
Yeah, for the next 5 minutes.
Things could quickly change.
This relief, obviously, as you would expect, considering that the market sold off pretty heavily when people were getting concerned that Trump was raising the stakes with Europe and it would be a bit of a tariff war over Greenland, and that seems to have receded quite a bit. But of course, as often as the case, investors are missing details. There doesn't seem to be a so-called framework here, but we haven't had any details yet. If you see some of the comments that came out from the NATO Secretary General in the last few minutes, it does look awfully vague. They certainly discussed plans, but there's nothing for investors to really chew on too much. And if you look at where the futures contracts are, they're actually still below where they were at Friday's close last week. So that's a bit of relief, but clearly people are not going gung-ho that this is a big turning point for markets. They want to see a little bit more. And of course, in the background, there's uncertainty over bond markets, which at one time or another will always come back to buy equities.
That is another risk for us to watch out for. But what about the things that we can chew on, including tech investments? We're hearing about OpenAI getting investments to the tune of $50 billion from Middle Eastern players, and then we have earnings to focus on as well.
Well, say it quiet, but there's a risk of AI fatigue coming in here. If you look at this OpenAI story just came out in the last few minutes or so, apparently they're going to the Middle East looking for a huge round of funding, and it puts their valuation at $800 billion kind of mark. About a month ago, exactly the same kind of story came out from OpenAI. Markets were much more optimistic about it, and previous announcements from OpenAI in terms of their funding and their valuations have boosted markets very quickly. That's not really happening right now. If you look at where the NASDAQ futures are, there's really not much change from when OpenAI talked about a funding round in December. There's a possibility here that people are getting used to the fact that OpenAI as a barometer of the AI story is peaking. Obviously there's a way to go here. We've got the earnings stories coming up. As you say, NVIDIA is still some way off before they report, and the other companies will be in the next couple of weeks. But it looks as though markets are beginning to fully price the whole AI thing. It'll be very interesting to see what the US markets do with this OpenAI report, because that's the real judgment as to whether or not people see it as being something that is fully priced or there's more to go. It suspiciously looks as though we're reaching a kind of a peak here on valuations. If that is the case, it's going to mean that in the earnings season, people will have to be very optimistic in order to beat what's already in the market.
Mike, we're starting to see the uncharacteristic use of the word exciting when it comes to talking about JGBs, and the wrong kind of exciting, really. We've seen them recovering, though, after some of the drama earlier this week. Sumitomo Mitsui, for its part, sees all this volatility as a buying opportunity. But is there a risk we can see the selling continuing, because we've got the BOJ cutting its net purchases? Might we expect to hear a little bit of commentary on this?
Yeah, we probably haven't seen the end of this. The danger from the Japanese bond market here. If you look at particularly what's called the super long end of the market, that's 20 years or longer, it's clearly become dysfunctional. If you look at the major markets, G10 markets, you have on-the-run bonds and you have off-the-run bonds, the benchmarks, and those that have been issued in the past. And typically, you don't get a yield spread of more than about 20 basis points between the bonds which are popular now and the ones from the past. In Japan, for the very long bonds, there's a differential as much as 200 basis points, which is crazy for a G10 market, and a very big one at that. The Japanese bond market is probably only the second biggest after the US Treasury market. So if you look at what's going on there, clearly there is something very wrong with the
very state-of-the-art technology, futuristic design. We use one more special technology from a very advanced place.
Surprise could be the way that has to
One second, we're going to save your neck here, and then we're going to wet your hair finish on top of the machine.
That would be a pleasant surprise to everybody. Let's see if he goes ahead with that, because something needs to be done. A central bank's job is to make sure that markets behave orderly. That is clearly not the case in the Japanese bond market. And if they don't, it's going to roil G10 markets for some while to come.
All right, we're very keen live strategist Mike Cranfield there. The Japanese banking giant remains optimistic about Tokyo's fiscal stance, despite this week's worrying signals from the bond market. Speaking to us in Davos, President and CEO Masahiro
This one's a
Kihara
very disgusting
also
for
reacted
design,
to
so all
Japan's
the things on
plans
here
to
is
tell us the
aggressive.
government's budget plan is not expansionary.
Don't worry, Shaq. The General gives you a break, whether it's on your car insurance.
Sometimes you cannot even see them, but you can hear them. It sounds like it's chicken magic. You know that's your hair right there. Or it was.
For a great low rate, go with the General.
1%. That's what it sounds. Brace yourself, as you know. Pray that we are going to use some things on
Know your rhythm. Together or apart. Pet Libro keeps your legs in sync. Because what's best for you is what's best for them. Is what's best for everyone. Pet Libro, designed better for your lives together.
Guaranteed to make you a millionaire, sir. We just can't guarantee you the time frame, okay? It can take a few hours, so you have to be patient. You got to be prepared to use it. All I want is a 1988 Honda Civic Cashback with an Integra Type R motor from Japan. That's it. Don't worry about the paint, okay? brace yourself. I'm going to be using the shears, okay? Remember, very sharp, very dangerous. Hold really still. I'm going to be taking measurements around you, okay?
Profile of the Japanese budget fiscal policy has been improved. Number one, mindset of the Japanese corporates has been improved, which means that you can expand the budget, right? And so I would say that, and also issues are improving. So I would say Kadama-san is saying it right, but she constantly has to send a message that they will be diligent on this.
The market's obviously not buying it because yields are surging and 30-year yields higher than bonds. Might that be a contagion effect? Might we feel the spillover?
But I think this discussion has to also come from what will be the terminal rate at the end of the day, right? And
what should be the terminal rate? What is the terminal rate?
So I think what is happening right now is that BOJ has changed their stance moving into this year, I think. So previously, I was thinking that the terminal rate might be the lower end of 1%. Based on the fact that Ueda-san is setting out to the market that the current interest rate is extremely low, and also that he reiterates that he will raise rates as long as he sees development in the economy, inflation on the path. So I would say at the minimum, 1.5% terminal rate. I think we can see that. It might be a little bit more. And then going back to your JGB question, historically, the difference between 10-year JGB terminal rate is only around 700 basis points. So if the market is already pricing in 1.5 terminal rate, it's 2.2 right now. I think it's fine.
In terms of capital repatriation, it's looking pretty attractive.
Yeah.
Enough for that repatriation to happen in a significant way.
You mean what you
from the US back to Japan, treasuries to
you mean those dividend coming back to Japan and things like that? I don't see a lot of that problem. That's not happening. If that happens a little bit, I think that will the yen might be over the 155 or so, but I don't see that too much.
Let's talk about the yen. The business continues. Should the BOJ intervene, raise rates, perhaps 3 times, as some people have suggested, to give support?
I would say you're right. So, if the terminal rate should be 1.5, there's another 3 times, right? So I think they should do, maybe they can do 1 time 50 basis points. I can expect that too.
Do you see the first move of the 3 being before June, July?
I would say the next opportunity will be April. So you can see how the corporate CEOs will react in reality to the wage increase. And if he confirms that there is a significant wage increase, and I think that he can confirm that in somewhere around March, April, it will can be the case.
And if the BOJ does move then, how much support, what yen level do you think we will see?
Yeah, I would say somewhere, the range will be somewhere between 1.5 to 155. Yeah. The market is only pricing 3 times. Well, that's what I mean.
How are you assessing the outlook for the business?
I think so. Even last week we talked about this, but we are concentrating our business into 4 areas. And those areas are doing fine. Those who are mass retail in Japan, asset management, wealth management in Japan, supporting the growth of Japanese corporates, and our global CI business. And we have seen a lot of significant processing in many areas. For example, the global CI business, we purchased Greenhill is fully integrated already. We purchased a European firm called Augusta, and we purchased an Indian firm called Avendus. And these firms will be canons for our global collaboration around the regions. and this will be our next steps growth. And last year I think I said that our target will be somewhere around fiscal year 29 or 27. After tax growth is 1.1 trillion, only 10%, and then PBR somewhere around 1.5. I think we're very close to that already. So we're working on revising that target fiscal year for fiscal year 28. And my gut feeling is that exclusive of the rate hikes that can be expected, after tax 1.4, 1.5, the range of 1.4 to 1.5 trillion, ROE 12%, PBR 1.75%. So that's
pretty ambitious.
Yes, we have to be ambitious.
Let's talk about your European business. Yes. You did talk about how the restructuring is done. Now you're going to be on the offensive. What does that mean necessarily?
Yeah, so we have been concentrating on optimizing our organizational structure, also our return. From an organizational perspective, we moved into a universal banking structure we completed that last year. So that part is done. And we reduced certain branches to get more effectiveness. On the return side, we reduced low return assets. We exited from certain relationships that doesn't produce the right return for us. So I think it's about our time to go out in the market, chase those opportunities. And I think that the opportunities will come from leverage on our US capabilities, collaboration on the regions, and also Japanese nexus, and also Middle East will be also very interesting. Introducing investment into that region or introducing investment flows out of that region will be very interesting.
Mizuho Financial Group President and CEO Masahiro Kihara speaking with Bloomberg's Haslinda Amin in Davos. We have more ahead on the Asia trade. This is Bloomberg.
Apple plans to revamp its digital assistant Siri into the company's first AI chatbot, pushing the iPhone maker deeper into the generative AI race led by OpenAI and Google. Bloomberg managing editor Mark Gurman wrote this and joins us now. So Mark, tell us, how is the AI version of Siri going to be different and how's it going to be delivered?
Thank you so much for having me. Well, as you might remember, 2 years ago, Apple announced Apple Intelligence, as well as a revamped version of Siri that would make use of AI. But Apple Intelligence came out, did nothing to lift sales. It was mediocre. People didn't really like or understand the features, lots of delays. And then the new Siri was supposed to let you tap into personal data to fulfill commands and use your voice to get stuff done on your iPhone and be able to understand what was on your screen to help you fulfill queries. Well, that never launched. It's already supposed to have launched a year and a half ago, and it still hasn't come to market. And so a few months ago, Apple struck a partnership with Google to use a custom version of the Gemini models to power new versions of Siri and AI features. That's going to start in a couple of months here with a new version of Siri that is able to bring to market the features that were delayed. But subsequent to that, next fall, they'll be releasing a completely revamped version of Siri, the one you asked about, that is redesigned and re-architected to be a chatbot that competes directly with ChatGPT, Google Gemini, and Microsoft Copilot. And that's going to run those Gemini models. It's probably going to work well, and it's probably going to be a game changer for Apple's AI efforts.
Mark, to your point though, we have been seeing Apple kind of lagging in the AI game. What is your assessment of whether it has the tech chops to mount a serious challenge to these existing AI chatbot players?
It doesn't have the tech chops. I think they don't.
Welcome back to your South, sir. When you came to the shop, you look like one of your cousins. So we know who it was. Once again, thank you for giving us the opportunity to be a part of the shop. Thank you for giving me the opportunity to be your brother today. Anytime you need it, 7 days a week, sometimes 8.
Technology powering product.
You all have to go. Whatever you normally pay is fine. Anything that you give us, all I'm going to do is hide it from my girlfriend, okay? If she sees it, it will disappear. So.
I understand. They just want their phones to do the cool things that their friends' other phones are able to do. And
even though we're here working, we're still on top of technology because the shift can happen at any moment. Corona's after work. Thank you very much, sir. We'll see you in 4 to 6 weeks, okay? All right, be blessed.
Human-centered robots means making life better for people. Hunter has an incredible vision about how humans and robots will work together. We envision a future where robots do the work that's dangerous and that's exhausting, and humans do the work that's creative and changes the world. Working with Hunter, we can make work different, more efficient, safer, better, faster.
Mark, thanks so much, and great scoop there. Bloomberg's managing editor, Mark Gurman. Now, the latest from the corporate front, Bloomberg has learned that OpenAI CEO Sam Altman has been meeting with top investors in the Middle East to line up funding for a new investment round. Sources say Altman is looking to raise $50 billion or more in the round, at a valuation of up to $830 billion. Several other top AI developers, including Anthropic and XAI, have turned to the region to meet growing capital needs. Anthropic's revenue run rate said to have hit $9 billion at the end of 2025, and that's more than double last July's figure for a metric that projects full-year earnings. Our sources also say the company is raising around $1 billion each from Coatue Management, Singapore's GIC, and Iconic Capital. The funding round could exceed $20 billion with prior commitments from Microsoft and NVIDIA. Blue Origin says it's